welcome to the Max India Limited Q4FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Rajat Mehta, Managing Director, Max India Limited. Thank you, and over to you, sir.
Thank you. Good morning, everybody. On behalf of Max India Limited, a warm welcome to all of you for this Q4FY23 earnings call. For the benefit of the audience who are joining us for the first time, I have with me my colleagues Ajay Agarwal, who is the CFO for Antara Senior Living and also heads Investor Relations for the company, our SGI Investor Relations Advisor. Also Ishan Khanna, who joined us in April as the CEO for Antara Assisted Care Services, Sandeep Pathak, who is the CFO for Max India and the legal head for the group as well, and Ankit Kalra, the CFO for Antara Assisted Care, and Nishan from Investor Relations. Yesterday we already uploaded our investors presentation. I hope all of you have gotten an opportunity to see that, but I will just take you through the highlights. Before I delve into the business details, just an update on the unfortunate fire incident that happened in one of our care homes in South Delhi, in our wholly owned subsidiary Antara Assisted Care Services. The matter was under investigation by the police authorities, and the ASCS team cooperated with all the authorities during the process. The police has now filed a charge sheet in the matter against the person responsible for this unfortunate incident, who happens to be a relative of one of the residents. We have been and again expressed our deepest sympathies to their families, and our thoughts remain with them. We assure you we'll extend all our cooperation in the future as and when required. Now let me shift to some of the business highlights. As you can see from our presentation, the growth story is quite visible and we continue to improve our financial results. Our revenues, after adjusting some one-offs that we had last year, like the sale of land and some COVID revenues and the revenue from a company called Max First, which we have closed, if you keep that aside, our revenues have gone up by 16% to rupees 213 crores in FY23, up by 17% to 60 crores in Q4 FY23. Our consolidated EBITDA improved to rupees 12 crores in FY23 from a loss of 1 crore in FY22, which is quite heartening to note. And the Q4 FY23 EBITDA further improved to 5 crores from a loss of 2 crores in the corresponding previous quarter. Treasury and other monetizable assets, which are represented by Max Towers and the Greater Noida land parcel, stood at a healthy number of rupees 530 crores. This includes a significant treasury of 80 crores in Antara Purukul Senior Living. I have been stating now that project is PBT, positive and cash flow will get generated. Very strong balance sheet position, a net worth of on a consolidated basis of 542 crores as of March end. On the residency side in Dehradun, we are only left with 4 units now. 2 of them are inhabited, by our general manager and the doctors on, in the campus. We achieved, a rise of 25% in our collection from a cumulative 510 crores in March 22 to 638 crores in March 23. On Noida Phase 1, very happy to report we are all sold out. All 340 units have been sold out. We have achieved a collection of about 252 crores, which is a 2.1 times growth over last year. And the other good part is that collection efficiency is 97%, which also looks, hints at the quality of sale that we have had. In terms of construction, again, very, very happy to report we are ahead, of our targets. Already completed 29 floors in Residence 1, 27 in R2 and R3 as of March 23. Which literally means we are constructing 1 floor every 15 days in each tower. And, we are in line with our aspiration of handing over possession, sometime in the first quarter, last quarter of FY25. On Antara Assisted Care, similarly, our overall net revenue increased by 42% to 16.1 crores in FY23 from 11.14 crores in FY22. In the current quarter, the net revenue increased by 54% to 4.5 crores in Q4 from 2.9 crores in the corresponding quarter last year. The care homes net revenue increased by 50% to 6.6 crores in FY23 compared to 4.4 in FY22. And net revenue similarly in the quarter grew by 28% to 1.6 crores, led by a ramp up in occupancy with similar contribution margin and some increase in bed capacity as well. The Gurugram care home, which we have been saying that each care home on a steady state basis should become contribution positive within 8 quarters. In the Gurugram care home, which is a proof of success, and the margin have improved from negative 25% to 13% in the last 8 quarters. And hopefully, as we ramp up occupancy even more, currently it's at 56%, this 13 number will trend towards a much higher number in the future. And that's the validation of our models and unit economics which we have put in place. On care at home, the net revenue increased by 18% to 6.1 crores in FY23 from rupees 5.1 crores, excluding of course the COVID revenue in FY22. And in the quarter, the net revenue grew by 23% to 1.5 crores, led by our focus on high margin service offerings with positive contribution margin of 12% in FY23. On Medcare, the net revenue increased by 86% to rupees 3.5 crores in FY23 from 1.9 crores excluding COVID revenue in FY22. And in the quarter, they grew by about 2.3 times. You might see a slight dip in margins in Medcare, and that's because we revalue some of the inventory, and that revaluation has caused some of the dips that came in the quarter. Some of you may have joined the call for the first time, so I'm repeating, and I'm sorry for others who already heard me say very often that we are perhaps the only organization in India which is creating a complete integrated care ecosystem for seniors, because we have competencies of hospitality, healthcare, real estate, all available to us under one roof. This is quite appropriate that seniors, as they age and their needs change, they are able to look at the same provider. To give you an example, if you look at Dehradun, as our residents move in more and more and age, we are finding the needs on healthcare are going up, and we're able to easily provide them through our Antara assisted care verticals. In terms of overall market size, the market continues to be very large, 10 to 12 billion. In fact, a very interesting study by McKinsey recently also pointed out that if you look at Set B population in 30 cities, that's about 1.6 crores, which is our target population. They are spending about 48 to 50,000 per annum on non-healthcare spend, which means a pool of 40 to 42,000 crores is available for tapping through our integrated ecosystem. This data just came out, last month. We already present in NCR, but soon stepping out into South and West. Bangalore already began that entry, hired the team, looked at an office space, so I'll talk more about it, as I go along. Just to reiterate, in the integrated care ecosystem, we have 4 verticals. For seniors who are independent but want to live with like-minded people in a safe, secure environment with primary healthcare services, we have, independent houses. We call it residences for seniors. Dehradun was the first, residence that we had, and now Noida. And similarly, Gurgaon, Bangalore, Pune, and similar places in the future. And we've already signed in principle the key terms for Gurugram and Bangalore, which my colleague Ajay will talk about as we go along. For seniors who can't be maintained at home due to age-related issues in terms of mobility, medication, bathing, monitoring, or who've gone through an intense medical episode and need some recuperation for a couple of months, they can come to our care home facilities. Also in India, this is popularly referred to as assisted living. And for people who have cognitive neuro disorders like Alzheimer's, dementia, early stages, we also offer the memory care home option. For those who require the services in the convenience of their home, we offer care at home services from critical care, physiotherapy, diagnostics, nursing at home, caregiver at home, pathology, etc. About 16 service lines. And for their recovery and comfort, we also offer a range of, products like wheelchairs, commode chairs, walkers, etc. As you can see, this is completely now capturing the synergies that we have. And if you now imagine the 8 to 10 communities that we want to build in the future, these are actually captive seniors staying with us, and whatever need they have, we'll be able to fulfill, which means our customer acquisition cost will start coming down, the way it's coming down in Dehradun or in care homes. We did commence our journey in 2013, have come long way from there. If you look at Dehradun, particularly in FY23, we sold 14 units with an annual sales collection of 128 crores. The project continues to be cash debt-free and cash and PBT positive. It's a vibrant community now with more than 150 residents staying inside, enjoying our service in a very pristine environment, and the resident satisfaction scores continue to be 90%. And the other important fact in Dehradun is that over 50% of our sales come through resident referrals, which is a great vindication of the belief that they have in the product. We leveraged the learnings from Dehradun and put them into Sector 150 Noida, so therefore we've been able to see more success in Noida. Launched in 2020 as a joint development model, it's already been sold out. And the important thing to remember is that the last price that we realized was 50% higher than the launch price. To some extent, this helped us utilize the impact of the rising material costs. Specifically, in FY23, we sold 91 units in Noida with an annual sales collection of 170 crores. To securitize the seamless construction activity, we have secured a 75 crore loan term facility from Aditya Birla Finance Limited, out of which already 40 crore, was drawn, and now we only have an outstanding amount of about 22 crores as of March 23. We're now preparing our launch for the launch of Noida Phase 2. The RERA application has been filed, and we are liaising with Noida and RERA for the approvals. As I said earlier, the key terms for development of residences in Gurugram and Bangalore already have been finalized. In Bangalore, it's a very good development, just about 10-12 minutes from the airport. It's in North Bangalore. Already 2 senior living facilities are already in that community. It's a 200-acre development, so it's a buzzing township already, and there we have signed the initial agreement, and due diligence is now going on. Similarly, in Gurugram, it's on Sector 36A, which is Dwarka Expressway, very close to Delhi. It's a beautiful development, a part of again a buzzing community, and this will be our first attempt at an intergenerational community, partly with massive space for construction. In Antara, so far served about 13,000 patients since inception. We are still the largest player in assisted living or care homes, in NCR. We are constantly reviewing and taking calls on what is working, what is not working, so we are displaying the agility of a startup, and some of this will continue, as we go forward. We expanded our hospital and clinician tie-ups, and we have, engaged with about 1,000, people, healthcare professionals in FY23. On the medical equipment side, we now have a store, virtual store on Amazon. All the building blocks, both for sales and rental for equipment, are in place. We have about 1,100 SKUs. We private labeled and launched our first Antara branded wheelchair with some senior specific features which we researched for a long time. For example, the tires and the wheels are not of rubber but EVA for a better grip. The material of the chair is antifungal, and we also have a safety belt for the seniors while in motion. So very thoughtfully designed products. We're also working very closely with IIT Delhi on innovations on new products for seniors. We've already sold about 125 plus Antara branded wheelchairs through offline and online channels. And during the quarter, 10 new SKUs, white label products, were also launched in the mobility category, walkers and commodes, etc. We've also received a QI certification for our care at home vertical, one more vindication of our commitment to excellence and quality. We have been closely working with the NABH, which is the authority, as you know, for certifying hospitals. They have taken out draft standards now for care homes and care at home, and we are part of that committee. Our satisfaction scores in Antara assisted care are consistently about 93%, with a very high conversion ratio of 50%, and reviews are about 70%, which is again a proof of the belief that customers have in our product and in our service capabilities. So to summarize, witnessing high growth across the 4 verticals, entering new geographies now, as you can see from what I have mentioned. Our aspiration remains consistent, 8 to 10 communities, which may have about 4 to 5,000 units, about 8 to 10,000 residents in the future, about 2,000 beds in care home. Of course, we did get impacted by COVID, so this is a plan for next 5 years. Memory care homes across North, West and South clusters in the next 5 years. And we're exploring possibilities, as I said last time also, to now build some digital assets to be able to figure out some health and wellness solutions for seniors with chronic conditions. And that is something I will talk more about in the year when we have launched those. This is all from our side. Thank you very much for your patient listening. Happy to answer any questions.
Thank you very much, sir. We will now begin the question and answer session. Participants who wishes to ask a question may press star and one on their touchtone phone now. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star one now. We take our first question from the line of Chaitanya Shah from Silverlight Capital. Please go ahead.
Hi, good morning.
Morning.
My question is regarding care homes. Could you tell me what are the total number of homes that are operational as of today and the number of beds that we are having?
450 plus beds. Some of that, we will rejig because of the incident. But about 150 beds, in NCR. And now we are exploring going into Noida, as well. And Bangalore already entered, looking for properties there now.
Okay, and the reason for the bed days going down sequentially in the last quarter would be because of the incident, right?
Correct.
So could you just give me an update on what has happened in the last 3 months and where you're standing as of today?
Happened in what regard?
In the sense, and how is that care home operational, and how in terms of reputational impact of that incident, what are you seeing in terms of the brand, and how it has affected the perception in general?
There's definitely a short-term impact, on contribution margin, and not so much in occupancy of other care homes. This care home is not operational because the insurance survey is going on. And for that, we have to, keep it the way it is. But a temporary impact did come. But on other care homes, we continue to have very high occupancy, so no impact seen on that side. No impact seen on care at home, no impact seen on Medicare, no impact seen on residences for seniors. So it did happen, financial impact definitely is there, I can't deny it. But that's behind us now, and therefore now we're focusing on rapid growth.
Okay, so what is your target for this year in terms of the number of beds that you're planning to open?
So again, it's a forward-looking statement, but we're planning to look at 300 plus beds within NCR, some in NCR and some in Bangalore and some in Chennai.
Okay, all right. The other question that I have is on the residential real estate part. Now, this is just a broad question in terms of, how do you think that this market is going to evolve? In US or in, developed markets, if I see, there is a very clear demarcation where there is a developer, there is an operator, and, there are REITs in between who own these properties. So, do you think that kind of model is going to evolve in India as well? Or, where are we in terms of that evolution in having this system set up so that, there is rapid growth and investment in this particular area of senior homes?
Yeah. So if you look at the trend now, we currently have over 55 senior living communities under construction or constructed in India. It's a much smaller number some years back, and more and more people have stepped into it. The model continues to be that there's a landowner who does a joint development agreement, with, an operator like us, for example. And we help in, our core competencies are in designing, in helping sell, marketing, and in operating the community. So the operations remain with the operator, and therefore the developer makes, a profit share, in the entire process, but does not run. There's also, we've seen a development in terms of, so the basic reason the developer is interested these days is because the senior living, facilities have a premium over normal residents. So that's why, he sees an opportunity as a separate vertical to be able to incent sales. And therefore more and more people are coming forward to also do intergenerational. So that's the shift we have seen in the last, year or so on the residential side.
Just to answer, this is Ajay. Am I audible?
Yes,
you are, sir.
So just to answer the first part, no, we are not seeing the US model in India presently because the REIT concept and the concept of owning residences and then, giving it on a rental basis or a sublet basis doesn't work in India. we'll have to be very conscious that in US market, all the expenses of those seniors are funded by government or by insurances, which is not there presently in India. So the return is not at all, conducive to get a decision wherein we do an asset-heavy business and then we, base our life on a annualized minuscule return. So that presently is not in India, but going forward, you never know, whenever that market comes and gets improved to that level, we'll change our product style.
Okay, all right. Thank you so much.
Thank you. We take a next question from the line of S. Chatterjee from SR Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. My questions are related to the Gurugram care home. Hello.
Yeah, go ahead, please.
I think the resident is lease property for us, or do we own the property?
The Gurugram care home, you mean?
Yes.
Lease. So all care homes will be lease properties. We don't own any care homes, and we will never.
Okay. So the direct cost, the contribution margin we are reporting, that is after the lease rent or before that?
After.
Okay. So and after leasing the care home, I think we spend around 1 lakh per room to develop it, right?
No. So it depends on the kind of care home that we take on lease. For a full care home model, which means that we are operating all the services, it's about between 1 to 1.5 crores, capital cost for retrofitting for safety features. So it depends on the state of the home that we take, but that's the capital cost. And the beds could be between 35 to 50.
Okay, sir. So in Q4, we did approximately 1 crore revenue, and our contribution margin was 13%. So after that,
but in steady state, once the occupancy goes up, the 13 will get pushed up as well.
Yes, sir. Sir, after this contribution margin, what are the costs there? Only the administration costs, right?
The HO costs, an allocation which might happen. Otherwise, all direct costs which are allocable to the care home are part of this.
Okay, sir. And this year we're gonna end with how much occupancy? Can we push it to 65%?
March 23, about 56% for the Gurugram care home.
No, I think, sir, by the year end, what should be the occupancy approximately?
No, it's difficult for me to comment, but our aim is to look at at least 70-75% occupancy, at least.
70% occupancy is possible. Okay, thank you, sir. Thank you. I will get back in the queue. Thank you.
Thank you. A reminder to participants, if you wish to ask a question, please press star 1 on your touchtone phone now. Take a next question from the line of Amit Mehendale from Robo Capital. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, please.
Okay, thanks. So I have a couple of questions. First, on the assisted care business, just want to understand a little bit on the customer acquisition side, and on the scale up. We can scale up to there is scale up on the beds. There is one side of the thing, and the other side is on the customer acquisition. So if you could just enlighten us on these two aspects, that will be helpful.
Sure.
I'm not looking for numbers. I'm looking more for strategy. Like how are we looking to expand, and what growth trajectory can we maintain?
Got it. Understand. So the biggest challenge, on the care home side is always to find compliant infrastructure. But so far we've been able to do that because the laws in each state are quite different. And we also got involved with the Haryana government about 2 years back to take out a specific policy, which has now been notified as well, which covers, such facilities. So that's been quite a help. And for the landlord perspective, it's a steady income for 9 to 10 years easily because they see the stable client, and obviously we take it on a long-term lease. The returns to them are in line with what they get otherwise on the residential side. So as we go forward, in Bangalore, for example, this category is more prevalent than in the north. So it's well known, and there are many, many more operators in Bangalore, so they'll be a little easier for us to scale up, and so is in Chennai. Because in South in general, the senior care concept is a little more evolved. That's on the supply side. We constantly look out. We have an infra team in place who does, scouting of properties, as we go in different places. On the demand side, the customers come to us primarily through three channels. One is obviously hospital referral. So we have tie-ups with most hospitals, in the NCR, from Max to Apollo to Fortis to Paras to PSRI to Narayana Hridayalaya to, Manipal. We tied up with everybody. Or they come through doctor referral. So specific doctors who are specialists who are working independently but deal with such, customers. They come to us from there. And we have a full-fledged team which is managing the hospital and doctor relationships. As I said, we have had over 1,000 engagements in the last year. We also participate in healthcare conferences and put up stalls so that the healthcare fraternity knows about us. The third channel is digital. So we do a lot of performance marketing, and we're seeing a steady flow, coming through, that channel. In fact, most long stay come through digital channel, to us. So it's a combination of hospital, doctors, digital, currently that is working for us in this regard in terms of customer acquisition.
Thanks. And just to follow up on the supply side, like if I were to be a landlord and going by your comments, if I were to get similar terms as a, rental yield, then am I incentivized enough? Is there a challenge on that side to find enough properties, to scale up the number of beds?
The challenge is not willing landlords. There are many, because they get a site to a very stable income actually. Otherwise, the normal tenants, it could be a churn every 3 years. The issue is compliant infrastructure, because our compliance requirements are quite stringent. So I think the landlord is not a challenge at all. He or she is very happy to get consistent annuity income, let's say, over a long period of time. I just forgot to add in terms of acquisition, the other channel which we're developing is communities. So penetrating RWAs, and making them our brand ambassadors to make them aware of this facility.
Got it. Thanks. And with regard to margins, how do you see margins shaping up? In some of the earlier presentations, there was a discussion about 12-15% EBITDA margin. Do you think we are more or less, as the model evolves, we are on track on that?
Yeah, if you see our investor deck, the Gurgaon Care Home, which is a proof of success, it's clearly for you to see. The contribution margins, beginning in Q4FY21 from -140% to -25% to -3% to 0, and now to 6, 8, 12, and 13% positive. So every quarter there's been an improvement, which is a proof of the pudding. And we see this 13% at 56% occupancy. The moment the occupancy is 75%, the 13 get pushed upwards.
Sure, thanks. And one last question on the care at home. We have looked at some of the other players, who are fairly large in this, and some of the players have also raised private equity money in that space. So the size of the opportunity seems fairly large, but how are we internally looking at that opportunity, and how do we see next 2-3 years there? What is our strategy?
Yeah. So you're right, it's a well-known category. All the players who entered the market initially have struggled to make, positive contribution. All of them are burning cash, as of now. It's a highly commoditized, very fragmented, sector. So our focus has been three things. One, on high margin services, which is diagnostics, physiotherapy, and critical care. Secondly, for us, it works in conjunction with our care homes, model, because we want to make sure that in the community where we are in, we're able to popularize this service and therefore have synergies with infrastructure if possible and manpower if possible. Therefore, our customer acquisition comes down. So for us, it's a very good completion of service. The third, as I said earlier, if you look at our resident communities, all the residents who stay there also need at-home services or medical equipment, and they have become our captive customers. So therefore, in Dehradun, all physiotherapy is being provided by Antara Assisted Care Services, Care at Home vertical. And as the residents come in Noida, then in Gurgaon, they will become, our captive audiences for Care at Home. And therefore, our margins will improve. And this is one advantage we'll have over the others.
Right. Sure, thanks. That's it from my side.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone phone now. We take the next question from the line of Anjana Shah from Shah Investments. Please go ahead.
Thank you for this opportunity, sir. Couple of questions from my end. So if you could just highlight some additional details on the intergenerational project at Gurugram. Like how big is the project in terms of units? And out of the total units, what will be the percentage that would be dedicated exclusively for senior living? And also, can we expect the launch of this in FY24?
So, in Gurgaon, the intergenerational key highlights are like the property is 11 acres. Approximately one-third will be allocated towards senior living. Because of the FSI norms in Gurgaon, the one-third area of 3.3 odd acres will give us a billable FSI of 7.5 lakh odd. So then that means you will have approximately 22 lakh square feet of development total. We'll be developing the project as per present planning. We'll be developing it on one phase only, the senior living, while the non-senior will come in two phases.
Sure, sir. So, do we expect the launch by FY24 or no?
We have just closed the preliminary conditions. Now we are into diligence process and doing final negotiations or final documentation. There is a process of license transfer also happening at the larger contract between the landowner and the developer partner. We expect we are targeting ourselves for a Q4 '24 launch, but the time will only tell. It will depend on the licenses, etc., which we get.
Sure. Also, for the investor presentation indicates updates on company entering Bangalore market. So how many projects are being planned in Bangalore, and will the company also launch projects parallelly across Pune, Goa, etc.?
So as a strategy, we will be launching one project in each geography. So we'll not go with multiple projects in the same geography because, as you can understand, the senior living funnel will be smaller than the normal resi. So we don't want to take that risk and we don't want to cannibalize our own sales. While it is possible that once we launch one project and when we see the success of that, we'll redo another launch in some time spring, but not together. So presently, we are talking to, we have already, closed our preliminary discussions on key terms with one landowner, as Rajat sir explained in his speech. The diligence is in process, and if that moves fast, then we are very confident that we'll be able to launch that project within 23-24. And as a plan B, also we are also in talks with other landowner, so that if anything falls in the first opportunity, we have an opportunity with us.
And the Bangalore opportunity is going to be a little larger in terms of number of units. It's going to be probably about 750-800 units.
Correct.
Sure, sir. That was helpful. Thank you very much. That's it from my end.
Thank you. Take a next question from the line of Rohit Mehra from SP Securities. Please go ahead.
Yeah, thank you for the opportunity. My question is about the senior residences. What is the overall strategy in residences for senior segment? And will be there new launches across all markets purely for the senior living, or it will be integrated? Right? Yeah.
So as I said, the plan is to look at 8 to 10 communities in India. Already we have Dehradun, Noida phase 1 already sold out. Gurgaon and Bangalore, the principal key terms already agreed and signed up. And in the future geographies in Pune, Goa, Chandigarh under progress. So we want to launch 8 to 10 communities, in the future, comprising of 4,000 to 5,000 units, in all, and about 8,000 to 10,000 residents who will occupy these. So that's the plan for residences.
Okay. And do we have greater benefits if we launch intergenerational communities as compared to standalone senior living community?
Intergenerational typically will happen depending on the respective regulations. So why Gurgaon was the appropriate place for intergenerational? Because the minimum acre size for a group housing is 10 acres. Now in a 10 acre with a FSI norm of 3.5, you just can't have 2,000 senior living space, right? So the best logical way was to have an intergeneration. But if you want to really bring the classification, it will always better to have a differentiator between senior and non-senior. So if the geographies like Pune or Bangalore give me an opportunity to make a standalone senior living community, that would be our preference. But if the laws of that particular geography will not allow me to have that kind of a smaller size, then obviously we go for intergeneration. What is positive is that now the developers are very interested and very open to the concept of intergenerational, which they were not earlier. So that opportunity has opened up to us in the last 6-7 months.
Yeah. Thank you. That's it from my side. Thank you.
Thank you. Anyone who wishes to ask a question at this time may press star and 1 on their touchtone phone now. Take a next question from the line of Rajat Jain, an investor. Please go ahead.
Yeah, hi. Just one question. You mentioned in the case of this care home, 6 properties are leased. You don't own any of them. So what's the tenor of the lease, and do you have an option to renew? How does it work?
Yeah, it's normally a 9-year lease with an option to renew.
Okay. I mean, that's an option both. I mean, the person can also terminate. The landlord can terminate the lease earlier or at the end of 9 years. I mean, what's the incentive for him to not renew the lease? Just curious.
Yes, he can. But, as I said, the advantage the landlord has today is the consistency of the annuity income, for him. And once the property gets developed as a care home, to take it back into a commercial use is quite difficult because it's been retrofitted for, seniors.
Right. And then you have some sort of like annual escalation in this 9-year tenure, or how does it work with him?
Depends from lease to lease. Normally it's after every 3 years.
Okay. Got it. Thanks.
Thank you. We take a next question from the line of Karan Mehra from Mehta Investments. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. So, 2 questions from mine. Firstly, it's good to know that Noida project is fully sold out. So, can you tell me what is the expected collections from Noida Phase 1 project in FY24?
Yeah, so Noida, we are having a total collection expectation of approximately 550. That will happen in all years to come. So that's a cumulative end collection what I'll get. So we are already starting at a 252 crore collection. Approximately 80-90 odd crore is the expectation for 23-24, and balance would come once we are going to give the possession in next years. But overall, 550 crores collection in phase 1.
Okay, that's great. Okay. And so my second question is, can you help me with the timeline for the Noida Phase 2 project launch, and what is the sales realization we are expecting per square feet?
We are presently the price of Noida Phase 1 is approximately 10,500 to 11,000. We intend to launch our Phase 2 project somewhere in the bracket of 12,500 to 13,000. The RERA application has already been filed. Now we are into discussions with the RERA councils, etc., to explain them the project, etc., and then whatever the likely time is going to take. We are absolutely prepared to launch it as soon as we get RERA, but being a government machinery, we'll have to wait and watch.
Okay, sure. Sure, sir. That answers my question. Thank you and all the very best.
Thank you. A reminder to participants, if you wish to ask a question, please press star 1 on your touchtone phone. We take a next question from the line of Chaitanya Shah from Silverlight Capital. Please go ahead.
Yeah, hi. Thanks again. My question is regarding the Noida Phase 2. Now, since you're getting this price escalation, is there any impact, positive impact on the IRR that you're expecting? That is one. And secondly, the new projects in Bangalore and NCR that you're going into, what is the internal ballpark IRR that you're targeting in these projects?
So, the price escalation in Noida Phase 2 also aims to mitigate the material costs that have gone up, as you can see from the market. We maintain the guidance of 15 to 17% IRR. In the other projects, depends on project to project, but at least, plus of 20%, at least, in both the projects in Bangalore and Gurgaon.
Okay. And my second question is regarding the Gurugram care home. The occupancy rates seem to have flattened out since the last 1 year, near 55-56%. So why has that flattened out, and when do you think can you reach that 70-75% level?
See, we already have long-stay patients who are staying there, which is better for, consistency of revenue. So some impact because of that and non-room availability. Some impact of this quarter as well, which has come through. So that's primarily the reason, but otherwise should go up now.
And what about the other care homes? When do you expect those care homes to hit that 60-65%? I mean, I just want to understand what is the lead time that it takes from the time you open a care home to you reach that occupancy.
It's about 6 to 8 quarters to hit occupancy of 55, 60, and then in the next within 12 quarters about 75, 80%. Normally a care home should break even in the 8th quarter, while in Gurgaon we experienced that in the 6th or 7th quarter because we optimized costs as we learned. Also the cross-sell is far better than our assumption. When I say cross-sell, it means that people who stay in care homes who need exclusive nursing or a diagnostic or physiotherapy, that number is more than what we expected. So the realization is a little more. Therefore, at a lower occupancy, we're able to break even in the 6th or 7th quarter. And on steady state basis, the contribution margin should be about 20% plus.
Okay, all right. Thank you so much.
Thank you. Anyone who wishes to ask a question, press star and 1 on your touchtone phone now. Participants, to ask question, please press star 1. As there are no further questions from the participants, I now hand the conference back over to Mr. Rajat Mehta for closing comments. Over to you, sir.
Thank you very much. Thank you very much for a very engaging call. Thank you for all the questions which help us, clarify our growth strategy, our profitability, our future, trajectory. As I said, Antara is the only brand in India which is creating an integrated ecosystem for seniors. So whether you need independent housing or you need services at home or you need facilities for assisted living or memory care or you need, medical equipment and products in the future, if you need health and wellness solutions, for chronic conditions, that also will be available through us. And it's been a great, year, as you can see from the published numbers, and we hope to accelerate this, as we go forward. So really appreciate your support and your interest and look forward to talking to you again. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, on behalf of Max India Limited, that concludes this conference. Thank you for joining with us. You may now disconnect your lines.
Thank you.